All right, fam, let's talk a little bit about market movement. As a trader, we identify three main movements in the market structure. The first one is sideways, when the price is not creating any higher highs, any higher lows. Then you have an uptrend and a downtrend in a channel, okay? So I want to talk to you a little bit about the consolidation or ranging markets, what they actually are. The consolidation or ranging market is when there is no higher highs and no higher lows, and the price simply goes from one point to another in a sideways manner, okay? The orders are consolidating and the buyers and sellers are quite happy, content about this price range, okay? They don't seem to be buying aggressively. They don't seem to be selling aggressively. Market seemingly is a boring market, a steady market. You can see that with certain pairs sometimes, for example, Euro USD, quite small moves occasionally where the market just goes up and down in this manner without any significant breakouts up or down, okay? So this is what we call a consolidation. All the orders here are consolidating. The next one is a down channel. Down channel, of course, it's easy for you to spot as well. You can see this because the market is creating a lower highs and then lower lows, okay? So you have a point here that is lower than the previous high, and then you have the point here that is lower than the previous low. That's what we call a down channel. You have to be able to address that correctly and realize that you have lower highs, and then you have lower lows. So you have to pay attention and see whether the previous low is higher than the next low. You have to pay attention whether previous high is higher than the next high, and that will give you the down channel, okay? Now, in the up channel, same principles apply. You have a market that is going within a up range, and you have your higher high and higher low, higher high, higher low. So you would be looking at making sure that the previous structure, the previous low, right here, is lower than the next one. Subsequently, the previous high is lower than the next one, okay? There you go. That would be your lower high, higher low. Lower high, lower than this one, higher low, higher than that one, and so on and so forth, okay? So let's have a look at the chart. We got gold over here, everybody's favorite. First, let's have a look at the ranging markets. Where are the ranging markets on gold over here? Now, let's do the trend line. Are these ranging markets? You can clearly see that gold has been in a specific channel for some time, going up and down. This would be your resistance. This would be your support. However, interesting things happen over here. All in all, this is your sideways channel, your consolidation. Let's have a look at some more examples. Okay. Consolidation, sideways, ranging. There you go. Roughly speaking, we have another example of consolidation right here, where the market is ranging. It does not cause significant movements up, or it does not cause significant movements down. Market is ranging. Okay? Now, what about the upward channel? Where can we see the upward channel? One of the examples of the upward channel we can find right here. Let's take the trend line. We have clear upward channel right here. Now, why? The upward channel is, as discussed just now on the drawings, when you have higher high, higher low, higher high, and then higher low. The higher high is higher than the previous one, the higher low is higher than the previous one, and so on and so forth. Okay? Where else can we find another example of the channel? These are pretty much easy to spot. I'm sure that you follow and you can see that, ranging market, downtrend, uptrend are pretty easy to spot. However, it might be sometimes misleading, so have to make sure that you identify it correctly. Okay, up, we have down, we have consolidating, up. Okay, hope that makes sense. Now, downward. Where is the downward channel? Where can we spot that the price is creating lower highs and lower lows? Lower highs and lower lows. Sorry. Lower highs, lower lows. Okay. Where is the lower high? Lower high, lower low. Lower high is lower than the previous one. Lower low is lower than the previous one, and so on and so forth. This is the way you identify the market structure. Now, depending on the time frame, the things might be changing, but the higher the time frame you look at, the more information it contains and the data is more solid for the trading setup. Okay? Thank you guys. I hope it makes sense. More detailed and more in-depth information about the market structure, about SNR and resistance becomes support, support become resistance, and how to actually enter and how to navigate through the choppy waters of the market. We will continue that on the further webinars, so you're more likely to join. Thanks very much.